Buy property in Panama and cash out almost tax-free. Hello, my name is Javier Correa. I'm the tax director here at the Rothbard Group. Let's dive right in. Panamanian real estate. It fascinates so many people in the West, particularly in North America, where most of our clients are. In Canada and the US, I know a lot of real estate investors that call me up and they say, Javier, what's happening with Panamanian real estate? I see gorgeous developments going up all over the place. There is stable demand, dollarized economy. Panama is just a wonderful place to invest in property. Can I get in on this? And so ultimately, my answer to most people that want to get into Panamanian real estate is that Panama is a great place to invest in real estate from a tax perspective. It is a very stable market, so don't expect massive appreciation, therefore massive capital gains. But from a tax perspective, it can be a very strategic location to own a rental property or to buy property, remodel it, and then resell it. So essentially, if you're a flipper, Panama can be a great place to start looking when it comes to your international expansion as a real estate investor. So let's take a look at what the situation would be if you invest in Panamanian real estate from a tax perspective. So number one thing you should know is if you're investing as an individual in Panama, the first $11,000 of income is essentially exempt, regardless of whether it is Panamanian source or not. In fact, let me clarify that right there. If it's foreign source income, it's simply not taxed. If it is locally sourced income, then you have essentially an $11,000 allowance that you can use to get $11,000 in local income without necessarily having to pay tax on that income. So that applies to any kind of income, rental income obviously not being the exception. So if as an individual you own property in Panama and you're renting it out, either through Airbnb or a traditional lease, the first $11,000 in rental income is going to be tax-free. If, for example, you have a business partner or a spouse, then they also have an $11,000 allowance that they can use, if structured properly, to shield more Panamanian rental income from taxation. Now, when it comes to purchasing property and then flipping property, here's where Panama can surprise a lot of people. So Panama has a dual treatment, almost like two options when it comes to how the properties are taxed when they are resold by their owner. You are going to be given two options, almost like Morpheus in the Matrix, right? The blue pill or the red pill. Panama is going to tell you, okay, option number one, you can pay 10% tax on the actual gain that you generate by reselling the property. That's option number one. And obviously, there is tax to be considered, but compared to what we're seeing in the West, a 10% capital gains tax on appreciated property is not really that bad at all. You're keeping 90% of the gain that you generate by flipping a property in Panama. Imagine that, 90%. You're keeping 90 of every $100 that you essentially make. That's option number one. Then option number two, you can also opt to pay a 5%, I want to call it integral fee, right, on the gross amount of the real estate sale. Let me explain that. That is not exactly a 5% capital gains tax rate, but it ends up being a very low overall rate on the gains if the gains are important. So under this other option, you can choose to tell the Panamanian government, I'm going to pay the 2% transfer tax for the property, and then I'm going to pay the 3% anticipated estimated income tax, and I'm going to essentially keep that as my final tax due for the real estate I have sold. So when we're talking about a 3% anticipated income tax on the gross amount of the sale and a 2% transfer tax on the gross amount of the sale, you can obviously sum them up and it becomes almost like a 5% fee on the gross amount of the sale. In this case, you're keeping 95% not of the gain, but of the gross amount of the sale of the real estate. When you do the math, being a tax nerd, like in my case, I'm a big tax nerd, so I did the math. And ultimately, the end result is when you start having properties that appreciate massively, the math favors the second method. Meaning that if you buy, let's look at an exaggerated example. You buy a property for $1 million and you sell it for $2.5 million, over a 100% appreciation. Let's say you hit a home run. In that case, when you calculate what 5% of $2.5 million gross amount that you're receiving is, it is going to be less than calculating a 10% tax on the actual gain of the 1.5 million, right? Because you bought at $1 million, you're selling at 2.5. For most flippers out there, Panama really does offer a very competitive advantage. The other benefits associated with this is that obviously by investing into real estate in the Republic of Panama, you can also get a residence permit. So it goes without saying that, for example, if you want the Friendly Nations visa or you want the qualified investor visa, you can purchase a property, $300,000 minimum in the case of the qualified investor visa, $200,000 minimum in the case of the Friendly Nations visa, and you can essentially become a resident of the Republic of Panama through your real estate investment. So in many cases, what I see is that certain clients will buy a property, they will anchor their visa to that property, they'll rent out that property. Once the minimum holding period is up, they will sell it for a profit, take advantage of these great systems where you can essentially pay minimal amount of tax on the appreciation of that property, while at the same time, taking advantage of all the $11,000 allowance for Airbnb, short-term rental, and long-term rental income while the holding period is active. So Panama is basically an all-in advantage. You get a residence permit by investing in real estate. Every year, you get $11,000 in tax-free rental income from your property. And if your spouse is involved with the right planning, you get an extra $11,000. So $22,000 potentially in tax-free rental income in the year from the same property that gave you your residence permit. And on top of that, once the holding period is up, you can essentially sell that property and potentially pay extremely low taxes on the gain. What more could you ask for? So if you're ready to invest in Panamanian real estate and harness all the great advantages that come with being a real estate investor here in the Republic of Panama, look no further. We have the real estate experts on the team, and we look forward to working with you. Rothbardgroup.com. See you next time.